Really no surprises coming through from Cashbuild this morning, in line with the company's issued trading statement. First half headline earnings down 21%, but excluding that BEE transaction, as Stephen was saying, headline earnings up 48%. So on an adjusted basis, things looking pretty good here. To what extent do we have to take the low base effect into consideration?
I think it's an important point you mentioned about the base effect, because last year this time we had a drop of earnings of 21%. So when you look over the 2 years compound, probably in the region of 10% that we've seen growth over the 2 years. So it's really a bit of a recovery to the trend we've seen over the past few years from Cashbuild, and it's really getting back on track on the lines where we were.
Well, especially in a context of current infrastructure and construction picture, which is pretty gloomy at this stage. It seems like you're particularly optimistic about the path moving forward and into the second half, where revenue's up 5% for the 9 trading weeks since the year end already, compared to the 7% increase in revenue we saw in the first half as a whole.
Yes.
So optimistic about the road ahead?
Yes, optimistic but cautious as well. We're expecting a tough 2011, but we've seen that our market is, the bucky builders, as our brigade that supports us, we see that they're very resilient. They're always on the lookout for work, and they keep the stores ticking over.
Let's talk about a few pressure points or challenges, because in this context where we've had expenditure increasing 16.4%, we've had the cost of electricity a big driver there. What are we looking at when it comes to ability to contain costs moving forward and more efficiently than you have in the past?
We've been pretty tough on costs over the number of years, and that cost increase, when you strip out again that BE component, on our existing store base is 7%, which is in the light of a personnel increase, which is our biggest cost of around 7%. There is not much in terms of that we can do. Our cost base is very fixed. We've got a high percentage of our cost being a fixed cost base, so our real driver is volume. And we need to make sure that we drive the volumes and making sure we get that up.
Well, speaking to traders out there, they've been saying Cashbuild seems to be outperforming because of its rural footprint, in particular, that there's enough demand out there to overcome some of the lack of demand we're seeing in the urban areas. So run us through that, because that will be a big contributor to your volume growth moving forward.
For sure, and also in terms of our strategy in opening new stores, and that is very much focused on rural areas. Although we do open in the urban areas, we've realized that we need to focus on that. We've seen strong growth in the rural areas, and definitely that's kept us afloat in this times.
In terms of competition, where you've got Walmart to consider via Massmart, even JD Group entering the market you play in with its latest acquisition, the Stein-built businesses. How tough do you think competition is going to be? How is that landscape shifting?
We've seen over the last year that competition is getting tougher, but our biggest competition is from the independents out there. There's probably in the region of 3,000 independents out there, and that's really the guys, that's tough traders out there. And they're the guys that react quickly and react to market circumstances very quickly. But coming back to the more formalized market, I mean, there is definitely, the competition is getting stronger, and we've seen in our update, we've said as well that our gross margins is coming under pressure in the second half. So we're expecting it to be tough, but we're very positive for the future, and we make sure that we maintain what we're doing.
Where your outlook is that gross margins are going to be coming under pressure, is competition the major constraint to margins moving forward?
Yes, I believe so. That's the market is only that big, and so more competition in the market will put us under pressure. It's all about, the market is very price sensitive, so we've seen pricing as the main driver for the consumer out there, and you would expect that from them.
Yet we've had that interim dividend up 48%, declaring an interim dividend of 157 cents per share. It's your highest ever. Let's go through the rationale there, and is this the kind of dividend that investors should be getting used to?
Well, yes, if the performance is like that, you should. What we as a board decided when we that the dividend, or when we approved the transaction with the BEE, was that we were not going to take that cost into consideration when declaring a dividend. Our cash resources are high at the moment, and the board has also started with developing a policy relating to what we're going to do with some of the surplus cash. So we are looking at that. and so that is part of our plans for the future.
Well, we had Steve talking to Rob Tull of Nedbank earlier, and he was saying that is one of the major appeals of Cashbuild, that kind of cash that's sitting on the balance sheet in terms of expansion and what we could be looking forward to in that regard.
We've opened 4 stores in this last financial half year, and we will probably open another 3 for the half year we're currently in. And then for the year ahead, probably in the region of 10 stores. So we will not grow at the rate of 20, 30 stores a year, but we will continue as in the past. Our record has been 17 in the 1 year, but we expect in the region of 10.
Of course, you know, the slowdown in the industry at large has been on the back of macroeconomic challenges. What's your outlook when it comes to the macro picture on which, of course, Cashbuild relies?
We're expecting the market, as I said, to remain fairly tough, the macro position for the rest of this financial year. Our market is very much also driven by employment, and obviously the more employment there is, the better for us, especially also in rural areas. So our expectation is that the rest of the year, 2011, will be tough, and that we would see some lift up happening in 2012.